Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another wonderful edition of the Power Trading Hour with me, your humble host, the koala bear of Wall Street. Big and fluffy. I like to chew on eucalyptus trees. The koala bear of Wall Street. Anyway, we've got a market that is slightly higher. We're going to get a look at it here. We're up about 0.8% on the S&P cash, plus 15 points at 1834.82. And we've got some questions in the den of whether I still think we could get down to 1800 for expiration, and the answer is yes. We'll get into that in just a little bit. Probably the most bearish thing that we have out today is just a little over 2 billion shares as we start today's show. So another day of a very, very light volume. I don't see a whole lot in it. And, I wanted to kind of spice the show up because sometimes it gets a little boring. So we're going to try to do a few more things. And one of those things are some more guests. And for those that know me, they know just how much I love music. So I decided to reach out and ask Sammy Hagar what he thinks about today. And this is what he had to say. Well, Sammy, he's just too positive on this market for me. Kind of Pollyannish. I think that we could go lower and lower, not higher and higher, Sammy. But always a fairly bullish. Every time I go to that song, very bullish song, and I could think of a lot of reasons to be bullish now. One of the reasons I could think not to be bullish is a close below, maybe 1833, 1832. We'd only have to pull back a very mild amount to keep the bearish picture back in this expiration. So a lot of it's going to be what we see on the close today, but a very, very light volume, extremely light volume for pushback up here. And I would not be surprised to see just a little bit of fade into the end of the day and still close under 1833, 1832. We're good. So a lot still has to do with the end of the day. We're going to get into more news, but light volume on an upward push, nothing new, just a very, very light volume compared to yesterday. And we're going to get into some stocks that are moving, and most of these are moving down very strongly. This is the canary in the coal mine, and we're going to talk about those in just a little bit. America's Got Talent polar. Okay. But yes, we'll get into it. The koala bear of Wall Street movie? Yes. I'm in negotiations at the moment. Anyway, today in 1942, President Roosevelt issues a presidential proclamation number 2537, requiring all aliens from World War II enemy countries to register with the United States Department of Justice. Registered persons were then issued a certificate of identification for aliens of enemy nationality. So the interesting thing was, if you read this, it sounds like they weren't U.S. citizens. Now, these people had been registered, were U.S. citizens, just had been born, or maybe were children of parents that were born in foreign countries. And, of course, probably in one of the biggest injustices since slavery, Roosevelt threw them all in the internment camps. And I don't know, for a guy that they give so much credit for, like they say, it only takes a second to throw your life away and your character away. And for some reason, for me, this was it for Roosevelt. Anyway, within the following months, they were shoving as many people in the Japanese internment camps as possible. well, along with some others. Anybody they didn't quite think that they liked. Yeah, a dark picture during a dark time in the United States, but I think we probably handled it a lot better. No one was burning down mosques or putting them in internment camps after 9/11. So maybe we've slowly learned a little bit out here from history. Yeah, stole their homes, bank accounts, businesses. It was horrible. And you have some people believe the patron saint of presidents, but I don't think so. Anyway, we've got more earnings coming shortly. Tomorrow, Bank of America and Kinder Morgan, I think both of those are before the bell. On Thursday in the morning, I think it's American Express, BB&T, Citibank, and Goldman Sachs. I think in the morning, and we've got Intel and UNH after the bell. Friday in the morning, GE and Morgan Stanley and SunTrust. I suspect probably not going to see any more surprises out of the financials. Probably going to be in line. The question is probably going to be this week for surprises or for surprises. It's going to be Morgan Stanley, Goldman Sachs, potentially Intel. Those are probably the ones that could move the market. Maybe a little bit of American Express, but those are the ones that look from the charts, the ones that look interesting before the end of the week. Heard Tom talking a little bit last night about security and credit card security and everything else. And it was kind of either a comment in the den or maybe he said something about why don't we hear about the same thing in Europe. And I hadn't brought it up, but very interestingly, the United States system is based on a bunch of card readers that have been around since the 1980s. And Visa and MasterCard have not been wanting to push their customers into actually getting new machines. Now, in Europe, if you get a credit card, it's got an embedded chip in the card. If you want to get all the credit card numbers you want, there's markets where you can go and buy huge amounts of them. You then trot on up to Target or Walmart, and you get one of those cards they have, either a debt card or one of the other cards, and you can buy those for little or nothing. Most people just go in and steal a bunch of them. They go in and using printers and print names and expiration dates on them, and so they kind of have that raised letters that used to work with the imprint machines. You then run it through a card writer. There are just absolute tons of those left over from the days of video stores where you issued cards that they would swipe to rent videos. So those things are immensely around, and you can write the cards as well as read them with them. So it's not hard to actually go out and make a card here in the United States. In Europe, you've got to have those cards with those little smart chips on them. And are there ways to break those? The answer is yes. But the bar is so much higher. Most people don't understand security is not a single wall. It is layers of security. It is barbed wire. Then it's chain link fence. Then it's a moat. Then it's punji sticks. Then it's something else. And then it's cameras. And then it's motion sensors. And then it's lasers. And it's drones. And it's everything. If you have a single point of failure for security, it will fail and fail easily. And that's what we have. You start layering these layers of security on, it's going to be totally different. But if you want to know the reason why we have these problems in the United States and not in Europe, it's 10 times easier to do it in the United States than it is in Europe. So for all those people that, even if they had gotten all the data for the cards, would they have been able to really sell it? Would there have been a big market? If you had to go out and make or spend 30 or 40 or 50 bucks a card to pirate or change or get someone to make all these especially credit cards that had embedded chips in them. And the answer is, of course, it would be much harder. and you wouldn't see quite as much of it. And, the idea is, let's say a few of those cards don't work. Let's say that you always kept just half of the information in your database was false. They'd be spending $50 on every other one that they just have to throw away. So there's a lot of wheat and chaff routines for putting in phony information in those databases, which they could have done too. You always salt a database like that with false customers, which they didn't do. That would have been make it very easy to sound alarms and arrest the people using those stolen credit cards from Target. So, and like I said, in security, many, many layers, many, many tricks, and of course, it costs a little bit, and they really don't care for the most part. Crocodile tears for most of the retailers out here when they use and save your data. We're going to probably have to see bigger and bigger fines until these companies come along and Visa and MasterCard decide on a system with at least a multi-layer and avoid the single-layer securities that we have now. A federal appeals court today has struck down the FCC's net neutrality rules, siding with Verizon in a case that would allow internet service providers to charge or restrict internet access based on customers or companies' usage. Basically, this is a case that came to court over Netflix. Not a lot of movement on that stock today. Most likely because they assume that the FCC will appeal this. If Verizon does win, look for this to rapidly go through Congress and have them cut off anyway. I'm kind of surprised that Verizon is pushing this when they know that there is absolutely no desire from the president and either side of Congress to let this fly. And the reason is that if they can continue being, I don't think everybody's watched the movies of California and cutting off the water downstream and watching all the cattle die of thirst. The whole idea of being able to control everybody below you in downstream in your water is not particularly enjoyable. Also, it is a way for Verizon to basically put a toll road on anybody that they think should be paying more money, or somebody like Verizon. Instead of paying and asking the consumers to pay like we do, they want everybody to pay. And I wrote a little, almost an editorial in the Tech Insider on Friday about how sick and disgusting the big carriers are. And if you go to Europe, you get twice as fast for half as much. And why is that? These guys live to screw over the American consumer. And it's been these communication companies were all founded by kind of car dealer-like people, and that culture continues on. Anyway, we'll be back in a minute. We've got a lot more things to do, and some I Told You So's coming. Be back in a minute.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. With the launch of Tiger TV,
TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
No, we're not. We're actually up. I think he's confused. Sammy Hagar does not agree. We're not falling. Although I've got to write that one down because I want to use that too. Yeah, falling. Anyway, that'll be our next musical guest, Fleetwood Mac. Falling, yeah. Well, but we're not falling. Still doing fairly well. Yeah. Still at 1835, 1834. Again, we're probably going to be looking at a close below 1832 or 3. I mean, we're so close that this is going to be a very hard one to call, but we'll get back into it. I had some emails, and of course, you can always email me at path@tfnn.com. I will check it during the bottom of the hour break. And we'll look at it. But one of the questions was, why did I suspect that we were awful close to a high? And part of that was there's always at one of these highs after a huge run in the marketplace, there's always one stock that has some kind of incredible move that's just ridiculous. And ICPT was one of those. If you haven't seen this, this is the biotech that got a little bit of action. And you're going to see a stock that does that, goes from 50 to 500 in 2 trading days, and then goes back 50%. But a pretty good indication that you've got a market that's extremely frothy. You would think that they turn something in lead into gold, then you find out that maybe these guys cause a little bit more cholesterol than everybody thought. So now it's only worth $236 today. And these kind of wild gyrations happened extremely in the tech market around 2000, right before the fall of the market, and actually through several weeks. But I'll get onto that in a little bit. But part of a topping market is moves that are truly unbelievable, and this was one of them. So we kind of got into that. But interestingly enough, also in the news out here, there's a bunch of people commenting in the den. I'm going to get to some of those comments probably after the bottom of the hour. The Fed was out. Hawks are speaking and no one is listening. Basically, they told everybody they'd pull the plug on all of it tomorrow, and no one cares. Two of them actually speaking. Market didn't even tick down a little bit on that. Fed's looking for comments about commodities also. Be interesting to hear what my stalker Andy has to say after this show. But the Federal Reserve is poised to take preliminary steps toward limiting banks' involvement with physical commodities. Part of this is from the congressional scrutiny and them finding out about all the shenanigans these guys have been pulling with just about anything that they can get to. Again, these aren't people on Wall Street that decided to follow the life of giving everything away. And Sister, what's the gal that went to India? Sister, what's her work with poverty forever? Anyway, they didn't follow her. They came to make money. They are mercenaries. And if you let them anywhere close to your money, they're going to take it. So the idea is partly whether or not and what they can do when, especially some of these larger banks that have been pulling rather dubious acts in the commodities business and how they're going to get them out of it. But asking for comments, my guess is that their mind's already made up, and we'll probably see a little bit lighter move in commodities. I always wonder if this was a maybe foreseen a bit. Maybe a lot of this move in gold is them getting out of some of the larger commodity positions, at least the ones that they can get out of. But very interesting to see the Fed getting proactive, especially on commodities. Love to hear his Mother Teresa, that's who it was. And that's it. Now, everybody every once in a while always says someone was brave because they came out against the Nazis, or they were brave because they stood up against slavery, or the deaths in Darfur, the killings out there. Now, if you really wanted to be brave, you'd sit there and slam and talk trash about Mother Teresa, but not so much so far. Shenanigans. Andy Heck's trying to type shenanigans. I would need my spell checker too. Not a word you spell every day. Anyway, when we come back, just a thought, but we'll look for your messages or your phone calls. But Jesse Livermore was a pretty good guy, and he said there's one thing to remember, and that is a market does not culminate in one grand glaze of glory. Neither does it end with a sudden reversal of form. They're going to make us pay for this. If this is indeed a high, and we should be short, they are not going to make it easy. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It takes two to make a thing go right. Come on. It takes two to make it out of sight.
Anyway, we're watching the market here, trying to figure out whether or not we're going to close above that 1833 mark. It's close enough that this market's fuzzy enough that I could see us even closing at this range and then gapping down yet again tomorrow. Not a whole lot new going on. So as long as I continue to see light volume up, and we only have 2.2 billion shares at the market, I think that we could have a surprise. It wouldn't be anything, I think, here to see a couple of days down of 12 or 14 points to get close to the 1800. But my guess is we'll have a 20-point day and then a drift lower Friday or something like that. 36 points is nothing in a index that's trading at 1800. But I think that's just the beginning of it. So a lot of people were asking whether I still thought we could get to 1800 by the Friday, and I think the answer is yes, especially with the light volume we're seeing today. Some of the other things that in my See, I Told You So, if you were listening to the show Friday with I and Tom O'Brien, me and Tom O'Brien, I and Tom O'Brien and I. Anyway, I hit one of them there. I'm sure I'm right with one of those. But I was certainly right with GameStop. We were talking about this chart and also talking about the future of GameStop. I said it was the next Barnes & Noble, It was the next industry to be savaged by people. In fact, on Friday we talked about its big, huge down day last week caused by Sony, saying that they were going to go all digital delivery, and there wouldn't be a whole lot of reason to have used game stores floating around in brick and mortar. And of course, if you're giving away a game or selling a game for $60 and letting Walmart have 20 of that, you're only keeping 40. Just keep it all. And both Microsoft and Sony are looking at that digital delivery. Pretty much, I suspect both Sony and Microsoft were told lay off about it for a while. We need to tell the big lie, and the big lie is that GameStop would be around for years to come, that there wouldn't be any huge sell-off of GameStop because the future was just up. It was so bright you had to wear shades. And, of course, right after that announcement, they beat up Microsoft for a while. But the market is, at least market participants on Wall Street, pretty smart. They'll run all the shorts out of the market as they slowly release BS statements, and they'll find a home. As one guy, a very smart trader, told me, there is an ass for every seat. And part of Wall Street is pushing that paper out. And if you can, as Rome burns, you continue selling that paper. That's what happened in GameStop. Of course, today they're coming out lowering estimates. Pretty much all the other stuff we already looked at, but wrote a fairly damning piece on them probably 3 or 4 times in the last year on GameStop, and really damning on Friday. But one of the things that we should be looking at out here, certainly that in the Path of Least Resistance newsletter today, we are looking at another big mover. Yesterday we had Cree, and it was off almost 10%, I think. Today, we are looking at X1, another winner for us. And, of course, I had a update for any of my readers of the Tech Insider yesterday. I said if these roll over by the end of the day, and I was talking about mostly the 4 or 5 stocks that everybody thinks about in 3D printing, that you really needed to watch it, because that was probably the end of blow-off tops for 3D printing. This thing got awful close up here, but what we did do is try to break the last high at 64.70 on X1 on November 14th. We had a huge reversal day yesterday. Got up to $70.25. Of course, it's hugely short stock, but we were in it at about the right price. And I was still a buck and a half below my stop on this, so I didn't hit that yesterday. Had a nice day in a recovery back down a little bit this morning. I think it got down to $60.10. But look for these all to move slower. 50.55 is my next target on it, and $40.01 would not be out of the scope of reason. A lot of these shorts are going to have a huge risk-reward ratio. In fact, we were talking to one of the traders in the den yesterday about how many, especially some of these ETFs and reverse ETFs, that just a normal pullback in a bull market of 50% of the last move would be hundreds and sometimes 200% on some of these leveraged ETFs if the market gets going right. So just be very careful. I've been working all morning on some stuff for my readers, but mostly it is just confluence levels. For those that are new to the show, I have not read Tom O'Brien's book, have not read the original work on setting up confluence levels. They are nothing more than where you get agreement between 2 different levels of 2 different moves using Fibonacci retracement numbers. And let's see if I can actually pull one up here real quick that we'll look at. Here's a good one. I've got a ton of them that I'm going to be putting out to my readers. And too bad maybe I can zoom in here, view. Zoom. Let's go to 200%. Here we go. You should be able to see it a little bit better. Maybe I can move this down just a little also. There you go. The two different moves are going to be from two different ones. I'm showing Insight right now, INCY. Two nice, huge moves back up. Now, when we're talking about the moves, hopefully you can see it. Maybe people can tell me in the den. But it is going to be interesting. You basically get the two moves, normally like year or even 2-year charts to set these up. And you're going to find a lot of times that there is an agreement between the 618 and 382 of two different moves. In this case, on Insight, it gives you a very good idea that the number is somewhere between $43.68 and $43.55. So you've got basically a 13-cent window on a $60 stock, and that's where support's going to be. And if you go back and look at this chart a little bit farther, you're going to see that that's where volume came in, or last time you really had volume in some up days. What was that up? It's in November sometime. But a lot of these are going to give a very, very clear, but you want these numbers to be very, very close. I basically look for 1% or less to start, and then start looking at the charts out here. But that wouldn't be anything more than a pullback to the last time this stock took off. And, we've got a little bit of reversal here. INCY. Let's go ahead and pop that up. INCY. So there it is. Today's the 14th, isn't it? No, it's actually a positive candle today. I thought it was red. Anyway, if we go back and look at it, the art of the charts will automatically find the most significant moves, and I'm looking on a 2-year chart. But what you really want to do is find these charts where you do find these long-term levels agreeing just pennies away, and a pretty good indication that even if you're bullish, we probably had a fairly long move out here. You would like to find some stocks coming back to some support level, and a good idea of where these things are going to be in these confluence areas or confluence zones. So be interesting. Trying to remember what else was moving out here that I wanted to talk about today. I think I wrote it down. SSYS. That was the 3D stock that did roll over this morning fairly heavily. No real good confluence levels in this. My guess is that you've got pretty much the mid-90s where this thing could easily pull back. But you're seeing more than one of these blow-off tops. For those people that are new to the show, what was it, 8 weeks ago, 9 weeks ago? I pushed a idea, or told everybody that a blow-off top had occurred in all these 3D stocks, and they just got savage. We had a couple of them in the newsletters and did extremely well with them. Now we're getting this second move. But anytime you see these huge moves, in this case in Stratasys, the blow-off top happened, where was that? On the 19th of November. So yeah, about 2 months ago. Now, these stocks continue to rally, and if we look at a little shorter time frame of this, you're going to see that we tested the 134 high of November 18th. It had 2.5 million shares with $4 higher and less than, 40%, 38% of the volume. On January 3rd, it's done nothing but roll over since then. Casino Buffett's... Okay. Okay. Anyway, Stratasys, looking at that one, X1. Yes, I got people IMing me, but they're IMing the wrong guy. And I've got it on mute here. I probably should mute my speakers also. But occasionally the guys IM me. Let's see what else I wanted to talk about here. GME, JBL. Wanted to get into that one. JBL. This is having a nice little bounce up. I'll get out of that mode. Unfortunately, this thing is bouncing right up to what should be resistance. This is Jabil Circuits. This thing blew apart, if you remember, just a few weeks ago when we found out that they were losing contracts from somebody large. The speculation at that time was either Apple and or Cisco. We are getting back up into that gap today on Jabil. Nice move out there, actually, for the market, but certainly it is up on 5 million shares today. Came down on the 18th on 24 million shares, and I'm actually about 5 or 6 positions short. And most of these things are the ones that I like that are rolling over, are just filling these gaps with very light volume, but not hard to see a lot of them. Polar, the IBB Biotechs, what about them? How does FCX look to me? FCX. Well, I called, 2 weeks ago? No, was it last Friday? It had to be 2 weeks ago on Friday. On the Tech Insider Hour, I was showing Tom O'Brien this chart, and it was just another one where I pretty much said that at least FCX had rolled over. It had already made its top. It had tested it 9 cents higher with less than half the volume. When we look at the October 30th high, $38, 19 million shares. We did test that on January 2nd with 9.7 million shares. This thing has been pulling back with fairly decent energy since. Looks to me like this would like to come back and test the 33.81 level on the test. Now let's go to a little longer time frame on this. See if we have anything on that. You know, it pretty much came right up into the longer-term confluence. Again, when these confluence numbers are fairly wide, in this case, $35 to $37, pretty wide. That means that they are fairly mushy. Still a good indication of hitting highs up here. Of course, it's just slightly higher than the confluence levels. I like them when they're very nice and tight, like the ones we showed before. But you know, it's done pretty much everything that it was supposed to do before. It's gotten back up. It's actually come and filled this massive gap down. That massive gap down came on, what, to 153 million shares on the 5th of December 2012. And like I said, almost all these good short positions are filling a lot of these long-term gap backs up, and they're doing it with much lighter volume, a good opportunity for these things to roll back over. But I don't see anything other than a test of the previous lows on a lot of these, especially coming back and just finally filling the gap of a lot of these stocks. Apple up a little bit today. This thing still looks like it could find 520, 525, kind of where I think this thing is probably going to expire. One of the things I did want to show on Apple also, though, is I wouldn't be shorting Apple a great deal. One of the reasons why is I want to have some of these stocks that can move 10, 15, 20% rather quickly. We got that in the Path of Least Resistance, my daily newsletter, with both a couple of those positions, CRE and X1. And as we look at those, you know, you need a 50-point move to get 10%. Probably only going to see maybe 525 this expiration. Problem is you get to 514. Very, very good support level for Apple. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
So I got back up to try my luck.
Why look?
Everybody's too much contention. Let's go,
Oh, my word. Every time I hear one of those disco songs, I start thinking it's time to change my views on capital punishment, or at least corporal punishment. Maybe we should bring caning in. And every time someone plays a horrible stinker, just a real steamer like that, maybe they should just be publicly caned. Or they used to put people in locks, and you could go up and throw rotten fruit and do other things to them while they were in the middle of the town. Corporal punishment. I think it's a good idea. It needs to come back, especially for those that would play bad music like that. And it's we look at times in our history when things were bleak and dark, I'm not the first one to compare disco to the internment of the Japanese in Second World War. Probably not the first anyway. Anyway, we look at the rest of the markets out here. I'm looking for a lower close. Maybe I'm on the wrong side of that. I only have probably one index position. The rest are all individual ETFs. I'll probably stop out of one that I'm short at $38.50 and actually probably going to get out of it at $39.50. I moved all my stops down yesterday. I normally do at the close stops in case we get intraday reversals, which are fairly common. But what we have is 2.4 billion shares. It's nothing. Let me update this just to make sure that we haven't gone anywhere. Nope, 2.4 billion shares. We've got no volume out, folks. The volume is gone, so I would be even tougher to it. We had a question in the den. I got about 2 minutes, and the question is why I would look at a particular chart in a particular way. And the reason is the trend. Statistics are tell you what is, if something is anecdotal or whether it's the truth. And one of the best ways to look at trends are Bollinger Bands. If you look at Bollinger Bands, if you're within pretty much a one standard deviation move like I'm showing here, that would mean that those are the trends you're probably going to stay in. If you're looking at half and quarter trends out there, you're probably missing the big picture. But the Bollinger Bands are one of the best statistical evidence that most of the moves are within what you're looking at. And to me, I would say that the question was on the IBB, that we are at the very top end of the Bollinger Bands after two significant moves. But what do we have? Maybe a couple since the 164 low out here on June 24th that are out of one standard deviation. But that's a good indication. It's not something I use to trade. It is something to tell me whether or not I'm right on which trends I'm taking. And as long as they all pretty much stay back in the standard deviation, that's it. If they're way underneath it, for a lot of times you're confusing noise with the actual signal of a chart. And I recommend reading The Signal and the Noise from Nate Silver. Good treatise. I actually just listened to it once again this weekend. Maybe I'll talk about that tomorrow. But statistically, if you want to be a technical trader, statistics and understanding statistics is one of the things you should do. But good indication if you're staying in or moving in. I can just see these now in my sleep. I don't need to worry again. Anyway, just reminding you here, we're getting to the end. I don't hear any music. You should have music. No music. Oh, well. Remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.